Foreign reporting is one of those areas where you can have zero taxable income and still have a filing obligation. The big idea is this. You're not just reporting income. You may be reporting the existence of accounts, assets, gifts, or ownership in foreign entities. On the EA exam, they love testing which law controls and which form matches the item being reported. Start with the two authorities. The Bank Secrecy Act, or BSA, is the anti-money laundering framework, and it drives FBAR reporting. FATCA is a separate law focused on reporting specified foreign financial assets, mostly through Form 8938 attached to the tax return. Exam tip. If you see foreign account, think BSA and FBAR first. If you see foreign assets, think FATCA and 8938. Next, lock in who counts as a U.S. person for foreign reporting. It includes U.S. citizens, U.S. nationals, U.S. residents, and U.S. entities. Here's the curveball. A non-resident alien can be pulled in if they elect to be treated as a U.S. resident to file a joint return. On the exam, this is often the hinge fact that flips reporting on. Also, remember the difference between a tax return and an information return. Many foreign forms are information returns. They can be required even when there's no income tax due, and sometimes even when there's no normal 1040 filing requirement. That's why foreign reporting feels so weird. The government may want the disclosure even if there's nothing to tax. Now, a quick roadmap of the common forms. FBAR is FinCEN Form 114 for foreign bank and financial accounts under the BSA. Form 8938 is FATCA's specified foreign financial assets and is filed with the tax return. Schedule B, Part 3 is the yes-no foreign account disclosure on Form 1040. Form 3520 is for certain foreign gifts and foreign trust transactions. Form 5471 is for U.S. persons with certain foreign corporations. A practical way to choose the form is to ask two questions. First, what is the item? An account, an asset, a gift or trust, or a corporation? Second, where does it get filed? Outside the tax return, like FBAR, or attached to the 1040, like 8938, Schedule B, 3520, and 5471. On the EA exam, they'll often mix facts, so you pick the best matching form, not just the most famous one. Dante is the sole support of his mother, Marina. To claim her as a dependent on his Form 1040, Marina must be a citizen or resident of which countries? The choices include only the United States plus India, the United States plus Mexico and Canada, or the United States plus Canada. Think about it. The correct answer is the United States, Mexico, or Canada. For dependency, the person must generally be a U.S. citizen, U.S. national, U.S. resident, or a resident of Canada or Mexico. A tempting wrong answer is United States or Canada because Canada is included, but Mexico is also explicitly allowed. Each of the following individuals are automatically taxed as U.S. residents, except one. The options include a non-resident alien who marries a U.S. citizen, a green card holder who leaves before year-end, someone present in the U.S. for 365 days without a valid visa, and a green card holder living outside the U.S. Which one is not automatically a resident? Think about it. The correct answer is the non-resident alien who marries a U.S. citizen during the year. Marriage alone doesn't automatically make them a U.S. tax resident. They become treated as a resident only if the spouses make the joint election to treat the non-resident spouse as a resident. The tempting wrong answer is the green card holder living abroad, but green card status generally still makes you a resident.